Despite the broader markets and its indecisiveness, the ARCa Bulls team still knocked out the targets out of the park. Leading into Jerome Powell's speech today, a market-wide sell-off occurred, and I must say, FNGR's price action maintained excellently. The question now would be, is our statistical play still intact or not? Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into the microburst. Let's kill him, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to thrive and survive. Let's go ahead and get started here in the 12-hour time frame for FNGR, where we have been observing that very silly formation here, the cup and handle formation, right? So we were able to notice that we were going to get an upside here, just taking you guys back a couple days ago, bouncing off of that 302 into the targets of about 367, into the targets of eventually hitting $4, right? So this, you can see here, we ended up hitting a target of about $3.98 at its true high before pulling back. And that was actually one of the targets that we were already expecting, right? A potential $3.99 top. And just observing here in the OHLC open, high, low, close, you can see that we hit a $3.98, just about a penny off of our destination, right? So we also expected large amount of volatility and a potential larger pullback from that target top. Now, the pullback, we also expressed some targets down to the zones of about, I believe it was 342. If we take a look at the chart here, I'm sure that we have some lower bound targets. Yeah, just around that 342. Of course, we ended up touching 331 here before, recovering here up to $3.69, and then essentially just I would say, man, this is a convergence here, right? So this may show us a little bit of pressure here, team. But please know that the sell-off here happened in spite of the broader markets, and that is actually shown right here as well, right? So this is the we could even see this on a 5-minute time frame right over here, right? So if we can get on the SPY, even on the SPY, right? We ended up getting this here on Tuesday. That was April 30th, right, just before May 1st, which was today. And you can see that we ended up getting a massive downside on this. And today's volatility during the Fed's speech is seen there as well. So very, very similarly, we ended up catching some of that downside price action here on FNGR2. Right, here you go. This is the price action on Tuesday, April 30th, just before today, before we experience some consolidation. So yeah, the market-wide pressures are, FNGR is not impervious to that. So we're definitely going to experience some of that volatility. So let's go ahead and take a look at another perspective here. We want to know, I guess the ultimate question here is our statistical play still in line? Now, usually for those of you who watch me often, Tuesdays are grandma day for my son. So we go over to grandma. So that's why it was a little difficult to release anything just yesterday. But take a look at this. We were expecting an upside printed yesterday, and we definitely got that upside on volatility here with volatility expansion. We are also pivoted towards the upside on stochastic momentum. However, there is a little bit of weakness, and I can see the weakness here, obviously. Right? So now that we've gotten about 2 days of slight red, this may deviate just a little bit and or slow down. But as long as the upside pivot is still present, then the signal is still technically fired. Okay, so in this case, the signal actually fired right down here at about $3.80. So now the targets the statistical backtest targets can now be adjusted ever so slightly. So just about like this. Let's move this. There we go. All right, yeah. So they changed up just a little bit here, and then we can also kind of favor those targets here and put them very close to their geometric top, right? So we do have a couple measured moves here, and this would be the bull flag move here, leading up to a target of about 549. The statistical backtest. Let's go over that data right now in case you are new to this. So we ran a daily time frame critical contraction of volatility into expansion through on the daily time frame throughout the entire trading history. See, here are all the iterations, all the samples. So that has led to about 20 total iterations, of which 17 were guessed correctly to the upside. That gives us an 85% probability for an upside thrust. That is about 33.40%. That's your mean. And I've also calculated the standard deviation and the upper and lower bounds of the first standard deviation. As you can see here, the standard deviation is very close to the mean, and it's sitting at a 35.12%, with an upper bound of the first standard deviation at a massive 68.52%. Okay, so plotting those targets out into the chart puts us here. Now that we know when the signal fired, which was on Tuesday, April 30th, at the opening of that 12-hour candle, or the daily candle, that's where we fired it. So at about $3.80, that means that the mean, the average upside thrust, would be 33.4%. That would be a target of about $5.08. Now, the second target would be $5.14. That would be your standard deviation top, and your upper bound of the first standard deviation would be leading towards a target that's confluent to the potential warrants that they're going to release. I mean, it's speculative right now, right? Because there are no release dates. Apparently, I know that some of the team was telling me that it's they haven't even given out the dates just yet. So that being said, still, right, we're leading towards a potential topside target here. I could still calculate further targets, but right now, even these targets are a little bit, they're kind of in the horizon over here. So if there is positive news coming out on FNGR, then kind of now would be a great time to push that forward. And the reason I say this is because we just got the monthly close, and let's see what that looks like. Okay, so the monthly close did it closed above its quarter, so that's okay, that's good. Let me see the bi-monthly. And the bi-monthly closed beneath its prior month open, which is not the best, and it also made a lower low. Okay, usually you don't want to see that, when you generally don't want to see that when you're trying to print upsides here. What I will give it is that it's in the form of a hammer candle, and it is at the very bottom here. That can sometimes, signal, like this here, reversal, right? So just in case, right, we're just going to go ahead and point that out and kind of keep that in our scope here as a probability. It's not the end-all, be-all signal, but it is something for us to consider. And when it's paired with the statistical upside that we have, then maybe that's something that we should take into consideration regardless. Okay, so let's go ahead and take a look at the immediate short-term time frame here. The hourly time frame stochastic is has a downside posturing here. 30-minute time frame also has downside, and let's take a look at the more immediate short-term time frame. Slight downside in the 5-minute, 10-minute slight downside here. We have the 15-minute and the 30-minute, of course. Let's see where it subsides. It kind of slows down. It kind of slows down only about to the daily and to bi-daily time frames, and then your 3-day time frame is a huge explosive signal here. And also, oh man, this is your 5-day signal may even fire too. But yeah, your 3-day signal just fired off. The signal fired off about April 8th here. So that's not bad at all. Okay, so yeah, there could be some continuation, but we have to observe price action, and we have to observe what volatility is doing, okay? So yeah, there could be, if the indicators are correct, it is suggesting a potential red day tomorrow. And if it is a red day tomorrow, then we still have some supports to kind of look into. First of all, here at 339, and let me kind of draw it in here. Yeah, 339 to about 342. And if we start moving into lower bounds, then this would be, this would be a higher probability target here, 335 to 332. Okay, so let's just go ahead and keep in mind over what's happening here. Next thing we should know is that there is a little bit of a bear flag happening here, or a bear pennant, and the targets, they would be showing us something around down here, right to the 315, 318 level on some of those targets. But we're not there yet, so let's just go ahead and kind of keep patient, and then we will move. We'll turn the page when we get there. All right, team. So if any questions at all, please remember to reach out to me, and also please always remember, right, that I'm still offering the ArcMasters trading course. I would like for you guys to reach out to me, right? ArcMastersCourse at gmail.com. We're going to go ahead and consolidate the beginner's trading course to about 4 to 5 weeks. And that's gonna transfer into the 8 to 12 week strategies mentorship. Okay, so go ahead and get in touch with me, and we'll get you enrolled. Also, remember to trade with me in the ARCables Discord, where we're trading the financial markets with other talented traders on a daily basis. Okay, team. So I think this is a pretty good place to cut it off. If any questions, you know where to reach me. All right, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and or day, and I'll catch you at the Bell Mañana. Adios, team.